Time for the market report. The latest WASDE dropped, but
didn't make much of an impact, and we'll talk about it. But first, the numbers. What were the week's biggest gains and losses? And then, this month's WASDE report. What did it have to say? And finally, two extension economists talked to us about the WASDE's effects. So, markets closed the week in the green, row crops with one exception, up while livestock split. Let's take a look. The week's biggest gain, wheat up 28 1/4 cents, a near 5% increase from the previous week. The week's biggest loss, lumber down near 17 bucks, an over 3 1/4% decrease from the previous week. So, this month's World Agricultural Supply and Demand report released from the USDA and didn't really make waves. More on that in a bit. The biggest takeaways had to do with grain yields, especially in soybeans and corn. Here's Bella Bingham with what it had to say.
U.S. wheat outlook unchanged from last month. Season average farm price remains $5.70 per bushel. Global wheat supplies up due to higher stocks offsetting lower production, which is still at a record level. Consumption up mostly in feed and residual use. Trade also up and ending stocks predicted to rise as well. U.S. corn stocks lower due to exports and ethanol production. Crop production projected up 39 million bushels compared to last month due to yield increases. Season average farm price $4.10 per bushel. Global corn production forecast down due to declines in the EU, Ghana, Russia, and Serbia, partially offset by increases for Tanzania and Canada. Imports raised for the EU, Mexico, India, and Thailand, ending stocks down 1.8 million tons. U.S. rice supplies up due to higher stocks and imports offsetting lower production. Average all rice yield down 35 pounds per acre. Total domestic and residual use down slightly but still at a record high. Season average farm price $15.60 per hundredweight. Global rice supplies up slightly, mostly due to stocks and production in India. Consumption also up while ending stocks projected down slightly. U.S. soybean stocks down due to increased crush. 2024-25 production projected down 3 million bushels, with crush and exports unchanged. Ending stocks projected down 10 million bushels. Season average farm price unchanged at $10.80 per bushel. Global soybean production up about 500,000 tons on higher crops in Paraguay and Canada. Trade increased about 182 million tons on higher exports for Paraguay and imports for Argentina. Ending stocks increased slightly. U.S. beef production up on higher cow slaughter and heavier weights. Pork production also up due to more slaughter but lower weights. Broiler production raised on more chicks placed in third and fourth quarters. Turkey production unchanged and egg production lower due to less laying flocks. U.S. milk production forecast lower for 2024-25 due to lower cow inventories and less milk per cow. Forecasts for cheese, butter, non-fat dry milk, and whey are all raised. All milk price forecast for 2025 raised to $23.45 per hundredweight. U.S. cotton stocks and domestic use unchanged. Production down 600,000 bales due to less yields for upland cotton in the Southwest. Exports down as well. Season average farm price unchanged at 66 cents per pound. Global cotton production lower due to smaller crops in the U.S., India, and Pakistan. Consumption down as well due to less decreases in Vietnam, Bangladesh, and Turkey. World ending stocks down as a result.
Now that you have the context, what did the experts say? I spoke with Drs. Will and Josh Maples of MSU Extension to get their thoughts, and, well, didn't seem that this particular WASDE made much of an impact on prices at all. In fact, it was more of a backing up of things already known. However, there was at least one major takeaway.
One big takeaway is they did bump up corn yields a little bit. This was kind of surprising to the market. Nobody really expected corn yields to bump. Didn't really expect them to go down either, though. So that carry out a little bit higher into next year. They lowered the average farm price by 10 cents on corn. It'll be really interesting as we keep going into this year, because we talked a lot about earlier in the spring about how wet the spring was. That's when, at harvest is when we will really see any yield impacts from that wet spring. So as producers get out there in the Midwest, start harvesting corn, it'll be interesting to see what they do with the corn yields next year in the WASDE.
I can see that they're reflecting what the latest crop progress report has said, which is that a lot of these crops are not in as good of condition as they seemed just a few months ago.
Yeah, so we expect crop conditions to come down a little bit as we get closer to harvest. That's a pattern we see every year, is they will get rated a little bit lower. But for all intents and purposes, it's going to be a bumper soybean and corn crop out there this year.
I've been hearing that myself too. So how does it look from the cattle and livestock side on the WASDE report?
Yeah, the biggest takeaway for me, Zach, is this continued increase in beef production compared to what we expected coming into this year. So if you think back, coming into 2024, we expected beef production to be quite a bit lower, 5% or so lower than 2023. USDA has continued to bump that number up, and it happened again in this latest report. Higher slaughter weights for fed cattle, and then also increased cull cow slaughter, or at least higher than expected cull cow slaughter, I should say. Those two put together, we're going to be really close to 2023 levels in terms of how much beef we produce this year, which is amazing given the tighter supplies of cattle that we've talked about so many times on this show.
So the biggest takeaway from the WASDE report for both of y'all, what do you think, how big of an effect do you think it had on the markets?
On the row crop side, this report's, it's not usually a big market mover. Whenever we start getting harvest going in the Midwest on corn and soybeans next coming months, those reports will carry a lot more weight to the markets.
How about on the cattle side?
Same on the cattle side. Not a huge shocker on anything here. So, I mean, I think it tells us more, or confirms a little bit more of what we already thought was happening. I don't see it being a huge market mover for this particular month.
And that's it for a deeper look into the markets. We're in a strange time of year with harvest underway, but still too early to really tell what our yields will be.